This how the RSI works. When it's at the bottom, price bounces up. For IT to fall 30%, first off, that the RSI is gonna be like what, 10 on the monthly? It never been 10 on the monthly for economic data, interest rates, and corporate results influence the buyers for stocks. So that's why you want to be in the U.S. economy, because the U.S. economy is so capitalistic. It's always going to be doing better than its expectations. The stock market is always going to be bullish, despite the crashes, despite the .com crash, the global financial crash, oil uncertainty, trade tension. Last time the RSI was oversold on UPS on the monthly, it went up around 508%. What's good, YouTube? Disciplined Diamond Hands back with another video, man. Hey, today I'm finna go with something very informative. I'm about to go with the best how to buy the dip strategy in the world for beginners. If you starting with $1, man, it only take $1. That's the con. Click the link in the bio. Sign up with Robinhood with $1. Start getting this money. Start making your investments grow. These are all the pros. If you want to mess out on the pros, don't start with $1. Start with 5. Start with 10. Don't do too much. Just start with 10. Cause look, you was gonna waste the 10 at Chipotle, McDonald's, at the smoke shop, at the liquor store. But what we're going over today is, I'm not a financial advisor, but I do have disciplined diamond hands. And what that means is, I got disciplined diamond hands. And today I'm going to set up the EMA and the RSI with y'all, go over the definitions on the slide, how to find a demand zone and enter, how to avoid a falling knife and look for rejection, wait for confirmation, invest in growing businesses and industries, never risk what you can't make back. I never risk more than 30%. So man, we're gonna go over this slideshow I created for y'all, navigating the dip. Then we're gonna go into the charts. All sources are from investopedia.com. Go check out all the articles. Hey, I would read all the articles for y'all, but I'm from the South and I probably already talk too slow and I might read slower. So I ain't gonna read the whole thing. I'm gonna just read what I highlighted and underlined, and y'all can pause it, read the rest, and research the articles, because I mean, it's always important to read the information for yourself, you know. First thing first, we're going over the EMA. This is the formula for it. You know, this is how you calculate the EMA. And I ain't gonna lie, I'm struggling with college algebra, so I don't do the formula. Why? Because the indicator gonna do that for us. Hey, check this out. Long-term trends are for 50 and 200-day EMAs. The short-term trends would be 12 and 26 EMAs. If you're using the short-term EMAs, go ahead and take that off, man. If you're a beginner and you losing with anything up under 50 EMA, take it off. I'm gonna show you a way that works for sure. While EMAs respond more quickly to recent data, they can produce false signals. Hence, they are more effective when used alongside other technical indicators. Like, that's why in the beginning I said we're going over demand zones, the RSIs right here beside it. We got to make sure they're good businesses as well. It's just not the EMA. Like, the EMA work. I'm gonna show y'all some EMA bounces, cause hey, I'm in a good investment right now with IT Gartner. They right there at that 200 EMA, I think, like on a monthly or weekly. Let's go check them out, man. Let's go check them out. I put them on this list for a reason. But yeah, this is the 200 EMA. This is how you add it. Type in EMA or type in this word right here. Then you want to type in this. But before you even type in this, you probably like, hey, how do I even get to there? I mean, I hope you knew you know. But hey, TradingView gonna get you right. And then go here. This should be your settings, 200, screenshot it. Because listen, if it's not on 200, it might be on 10, 20, 50. It might be on 8,000. And if your length ain't on 200, you're not using the 200 EMA. So yeah, this is it right here. This is just my colors, you can change it. Then for the RSI, we're gonna do this. These are the inputs, these are important. If it ain't on 14, you might have yours on 8,000, I don't know. But if yours on 8,000, then you for sure is not using the right RSI. But this how the RSI works. When it's at the bottom, price bounces up. Let's see the last time. See, the last time IT ain't never really go oversold on the RSI. But now they are. They're not even oversold on the RSI now. But I'm already in them early and they already taking off. Like, and this is my thing, like I said, you can't let nothing go more than 30%. That's the thing with IT is like when you invest really at the bottom, it can't go less than 30%. And it can only go up over 100%. That's what I'm saying. So check this out. For IT to fall 30%, first off, the RSI is gonna be like what, 10 on the monthly? It never been 10 on the monthly. First off, just let that marinate. And then they're growing as a business, even though they got some challenges, you know, with AI and stuff like that because of the sector they're in, because they're in the research and advisory sector. They help businesses make more money basically with research and advisory, you feel me? And they the number one in the game. Look, analysts rating them to be at $300. They bringing in what, $6 billion a year, net margin 20%. Who doing that with research and advisory? Nobody but them. And who gonna keep it up? Cause they got people that's been working for them 20 plus years. But yeah, I actually like IT so much. I gotta show y'all this what I did. So first thing first, this is my journal. Everybody need an investing journal. You gotta be able to write down the description, the SWOT, the moat, fundamentals, the leadership, the current news. You gotta be able to write down all that stuff. And research out of it. And the leadership, because it's like, once you understand the leadership, you can understand like, okay, is they really gonna follow through with the fundamentals? You think this leadership gonna follow through the fundamentals? You think they moat or SWOT is good enough to be here after you're gone? Cause think about it, if you invest in anyway, you gotta invest in that's gonna be here when you dead. So it's like, okay, they gonna be here. They was here before I was alive, they gonna be here after I'm unalive, you feel me? So that's how you know it's a good company. All right, let's check this out. The RSI is calculated with this formula right here. Like I said, a college algebra hard enough. If you using this formula, you're very intelligent. And I don't know why you're watching this video. But an asset is usually considered overbought when the RSI is above 70 and oversold when it's below 30. The RSI works best in trading ranges rather than in trending markets. So we got to go over that 30 and 70, and we got to go over that trending and trading markets. Okay, like I showed y'all right here. It wasn't at 30 because IT ain't never get the 30 yet, you feel me? When they do, I'm going in heavier. Like if they come down more, I go in heavy. I ain't gonna lie, they could come down to this level, but who knows? But yeah, that's the 30. And then look, let's check this out, man. This the 70 up here. But as you can tell, it was riding at 70 so long because it was a trending market. Like it should have been fell. It was still going up for like what? From December 2023 to what, February 25th. So it's like, even though it was oversold, it was still trending up. That's what they mean. It don't work. That's why you need multiple things as well, because even though it's trending, like look at AMC. AMC is trending downward every day. And then you can't even see them going up. I'm not even gonna zoom in. I had to use AMC in my other video as an example about how they stopped paying dividends. So if you didn't check that out, go check out my last video about the dividends and stuff. But yeah, LEN is something else I'm in, but what's else on this list? Buy low, sell high has been a popular advice that traders or investors try to follow. For those applying the advice, bump out it. Fundamental and technical analysis can help determine whether or not a deep dip presents a good buying opportunity or a falling knife situation. That's important. There are many potential causes for a falling knife to occur, including earnings report. If they got a bad earning report, their EPS is 50% low and their revenue is 50% lower than what they expected to make, it's gonna be volatile. Economic reports. Hey, let's see. Hey, if the Fed cut rates, in the market, I ain't gonna lie, the market ain't been that bullish. But depending on the economic reports, you know, the home reports, if home building is good, the home building stock is gonna be good. But depending on the economic reports, it could cause volatile swings and falling knives. Maybe the government shutdown, you already know. A technical breakdown, if it break through support levels, that's why we need to see it holding wick levels and multiple rejections off of it. And fundamental deterioration. If the business is becoming unprofitable by the year, then why invest in them? Because if you're owning something, you want to own something that's going to make money. And if their fundamentals are deteriorating, they're not making no cheese. Supply and demand, the key takeaways. In terms of financial markets, supply and demand determine the price of the stocks and other securities. Economic data, interest rates, and corporate results influence demand for stocks. Market dynamics, economic conditions, and changes to economic policy tend to impact the overall supply of stock. Economic data, interest rates, and corporate results influence the buyers for stocks. So if this is bullish, interest rates going down, corporate resorts are going up, then buyers are going to step in. If economic conditions keep talking about this war and keep talking about trade uncertainty and everything else, then sellers might step in. But hey, it's gonna always be a bull market more than the seller's market. So that's how it's been since the 1600s, you feel me? If the economy is doing better than expectation, it creates more demand for stocks in anticipation of better earnings. That's why you want to be in the U.S. economy, because the U.S. economy is so capitalistic. It's always going to be doing better than its expectations, as long as we keep indulging in it and keep being major consumers, you know? We already set it up. We're finna go over and find demand zones and enter. Okay, first thing first, I entered UPS based off of this demand zone. I'm going to go over demand zones. What is a demand zone? It's what buyers step in. What time frame should we use? We should use the highest time frame possible, the monthly time frame, because we're investing. We're holding these positions for 5+ years. If it's 5+ years, unless they just do 100% and 200, yeah. But let's check this out. Buyers stepped in here and here. Two major levels. And now we're here again. RSI here. RSI was oversold. Last time the RSI was oversold on UPS on the monthly, it went up. It went up around 508%. UPS is the worldwide best shipping company in the world. It's in over 220 countries. They're working on becoming more profitable, and yeah, they're gonna recover. Their CEO believe in them. I believe in them, man. And hey, I actually, you know what I'm saying? Hey, I got some notes on them too. UPS was my most notes I took on here. I got 4 pages full. But you need a description, SWOT, moat, fundamentals, news, leadership, customer reviews, and worker reviews. You feel me? You need to know the ins and outs. And that's not even it. I'm finna keep adding to that list. But yeah, this is a demand zone where buyers stepped in. And check out Clorox. Buyers stepped in here 1, 2, 3, 4, 5, 6. Look, it stepped in at the EMA as well. It's holding the EMA and it's holding the horizontal. And it's not oversold, but I mean, it's near undervalued levels, you know. And the last time, yeah, Clorox really don't get oversold. It really don't. But it's at that area, so I got some in there. They're finna run up. Let's see what's next. How to avoid a falling knife. Look for rejection. Wait for confirmation. Invest in growing businesses and industries. Never risk what you can't make back. I never risk more than 30%. Bro, this is why you never risk more than 30%. First thing first, the stock market is always going to be bullish. Despite the crashes, Despite the .com crash, the global financial crash, oil uncertainty, trade tension, COVID, inflation, the president inauguration, market gonna always be bullish. So listen, if you buying something that's so undervalued and the stock market is always so bullish, it's gonna be hard losing more than 30% unless you're just buying too early. The only way you'll lose 30% if you're not buying at the right spot. Like look at LEN. Okay, I was looking at this area on LEN. Buyer stepped in, and I was looking at them right here. And not only that, I was looking at them on the RSI. You know, it's crazy. I saw the news Warren Buffett invested in them too. I was like, hey, I know I'm holding. I actually added to them today. I actually added more to them on this dip because they're gonna keep ripping. But yeah, look, RSI, demand level, great company. I won't say too great, but great company, great investment for sure. I say great investment, I ain't gonna lie. But look, 30% is so low, it won't get there. And if it get there, that just means I bought too early. But obviously I didn't buy too early. But yeah, it's gonna go. It's gonna make all-time highs. Cause think about it, rates dropping, more houses finna start getting built. Boom, LEN finna go to the moon. Every time something good come out about the housing market, LEN going to the moon. But yeah, that is how you never risk more than you could make back. I never risk more than 30%. Appreciate y'all for watching. Peace.